you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M Plus Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M Plus Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the Edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M Plus Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M Plus Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M Plus Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Fun. Can you guys hear me? Can you drop a comment in the chat and let me know if you guys can hear me? Anyways, welcome to today's M Plus Global live stream. We are back again with another English live stream, and as usual, do tune in to our morning sessions from 9 a.m. to 11 a.m. and our evening sessions at 7 p.m. to 9 p.m. every weekday. And not to worry, if we do have Mandarin and Malay live streams, so if you prefer a different language, make sure to tune into your preferred live stream. So you can always check that out on our social pages at M Plus Online. Now, whether you're an expert at trading or unfortunately still a newbie like me, I hope you'll find this live stream informative and fun. And who knows, maybe this live stream might teach you a thing or two and you can begin your trading journey with M Plus Global today. My name is Caitlin and I'm your M Plus Global anchor today. And my dear viewers, we have a special guest who will be joining us today. So I'm not completely alone. And I think you should be pretty familiar with him by now. He is our in-house expert as well as head of research, Louis Lau. But before we get to that, if you're new here, you should probably download our M Plus Global app. All you need to do is just scan this QR code right here and it will take you straight to a registration page where you can just put in your details and you get to redeem cool stuff. How swag is that? So you just need to register your account and deposit a minimum of about 10,000 ringgit and you get free 5 Grab shares and Hong Kong and US live quotes for 30 days. But the thing is, right, this campaign ends in 5 days, so quickly grab it while you can. See what I did there? And on top of that, you can also get to enjoy 90 days of free NASDAQ real-time market data. So this doesn't really require a minimum deposit, but if you're gonna deposit a 10K for the other campaign, you might as well just enjoy both, work smart and not hard, people. Okay, so if you haven't already done it yet, scan this QR code right here and register your account. I promise it only takes 5 minutes of your time. All right, so before we get down to business, I just want to let y'all know what's on the agenda for tonight. So basically, after this, we're going to go for a quick break. And when we get back, our special guest will be joining us with his very insightful market talk. And what else is on his list for us today? We'll find out soon. Now, if you ask me, I have no idea what to expect because I have almost zero knowledge about these kind of topics, but we move. Okay, so after Louis' talk, we'll have a short Q&A session. So whatever questions that you or even I myself might have, just put it in the chat and I'll ask him everything, okay? Everything. But folks, that's not all now, is it? We always have to have our little mini game where you can stand a chance to win 20 ringgit in trading vouchers that will be credited straight to your account. So you really need to have a M Plus Global account here to get that. So don't go anywhere. We've got some fun and interesting things lined up for you. So stick around till the end, till when we announce the winners.
Hi everyone, can you hear me? Hi everyone, yeah, can you hear me? If you can hear me, just put in some, write something, say hello in the group chat, in the comment section, yeah? Okay, I guess today we have the ETF product training. It's not really training, but I will give you some insights towards ETF, and perhaps you can actually pick up some of these tools or some of these insights to trade ETF going forward. So I think it is very interesting to understand what is ETF and why do we need to use this ETF as a trading tool in the US. I think a lot of people would have understand that in Malaysia we have ETF as well. Then in US or in Hong Kong we also have ETFs, but there are more sophisticated ETFs in US and also in Hong Kong. So let's start by a little bit of market updates because we want to understand what kind of ETFs to use when we are in different season. So perhaps right now it is like a results reporting season. We have technology giants like Microsoft, Amazon, Google, also Meta that is actually coming out with their results soon. And also US GDP is actually coming out as well, and PC numbers are also coming up as well. So these are the three events, okay? So key events that has been in the market right now, and we are waiting for GDP and also the PC numbers. Perhaps this is why you can see that in the US market, we are not able to see a lot of volatility. You can see the market direction is quite uncertain. Why is it so? It is because GDP is a function of the economy, but at the same time, it will also affect the tone of the Federal Reserve, such as the FOMC meeting, what sort of direction they are going to. A lot of traders, wanting the Federal Reserve to look into a slightly dovish tone or even a rate cut if the GDP is going to contract further. So I think GDP numbers is very, very crucial because if the GDP numbers is going to contract, and that may actually affect the Federal Reserve's tone, and they might go into a less hawkish tone in the upcoming FOMC meeting, which is in the early May. Okay, then on PC numbers is some sort like a inflationary indicator, and if this indicator is actually increasing, it might set a tone for a more hawkish FOMC results. Maybe they might go into more interest rate hike going forward. So that's why throughout this period of time, over the past 2 weeks, it has been very, very minute or very, very narrow trading range in the US. It is because we are unsure what to expect within this for these two numbers, two data. And if these two data is giving us a very mixed signal, then the FOMC meeting might go into also uncertain period, and that also might affect the overall trading sentiment. So I just want to mention here, this week itself until the end of April until May, there are a lot of reporting season, which is financial results coming out from these tech giants, and that will be the determinant for the direction that we can actually handle going forward. Okay. So just to give you an idea of, even when the market is going sideways, there are always trading opportunity. I'm not too sure whether you agree with me or not, but I just can show you what I've gathered from Bloomberg data is that this price change, these are the list of ETFs that has been going up more than 10% over the past 10 trading days, despite the market has been quite sideways ranging mode in the be it the Dow Jones, be it the S&P 500, be it the Nasdaq index. So these are some of the stocks that some of the ETFs that you can look at. Some names are there, some Tesla, some of this biotech bull. Okay, so to dissect this ETF, later on we will have a very detailed session on ETFs to talk about what are issuers and what sort of direction they are providing traders as. So you can see that in this slide here, you can see some bull, some of them are bear. Okay, so which means that they provide you a direction to speculate on, and also you can see 3 times 3x, 1x, 3x. So what does it mean is it means that there are leverage within these ETFs. Okay, so it's a general rule of thumb that issuer's name will be in front, then on what products it is in, like this is Tesla, then they will give you direction and they will give you the how much multiplier that you can get from this ETF. So these are some of the ideas here. So basically, all these are ETFs that perform more than 10% over the past 10 days. So just take note that during market sideways ranging mode, we can still have all these opportunities out there. So ETFs is one of the tools that you can equip yourself with to generate some returns. Okay. So just to give you an idea of over the past 3 months, what sort of asset classes has performed and underperformed the market. So you can see that currency went up 9% over the past 3 months, equity went up 4% over the past 3 months, and some volatility ETF went down negative 14%, and some preferred stocks went down negative 4%. So generally speaking, people would track this kind of performance to see what sort of opportunities they have in the market. So some good highlights about ETF that you have to take note is that ETF is a trend. It's a growing trend that ETF trading value has surged more than 40 trillion in 2022. So this is coming from 10 years back. It is just about 15, 16 trillion. But right now it has surged to 40 trillion. So what does it mean? It means that a lot of issuers are thinking that ETF is one of the good way to provide a tool for the retailers or investors to put their money in and try to track ETFs. Because ETF is like a very lazy tool. If you take it as a very passive way of doing it, you can put in money every month like a unit trust. But ETFs is slightly cheaper as compared to unit trust. That is why it is capturing a lot of attention from the retailers or from the investors out there. So you can see that ETF trading volume, value has surged more than 40 trillion in 2022. And ETF has contributed to the largest percentage of trading in a decade. So throughout the past 10 years, they are ranging around 20-25, but right now it is more than 30%, 32, near to 32%, that the trading value has been in the stocks exchange. Okay, so basically in the stocks exchange, let's say you have trading volume of 100, perhaps 32 shares are traded within the ETFs itself. So that is the idea here. So a lot more people are taking the advantage or taking an opportunity within the ETFs. And thirdly, total number of ETFs trades has hit record high in 2022. You can see on the chart, 2013, normally we have per day basis, we have about maybe less than 5 million trades per day on ETFs. Right now it has hit about 12 million trades a day, in 2022. So again, a lot of attention is in ETFs, and that's why not only you can buy into the underlying stocks or equities, but you also can use ETF as one of the tools to gain some opportunities in the market. Okay, so it started from 1993, 1996, where a lot of new funds has been trading. So first American ETF started in 1998, S&P 500. Then later on it went up more than 7,000 of ETFs trading globally. And okay, so basically what I'm saying here is that the history of ETFs started from 1993, 1996. So therefore they have more than 25 years of history, performance in ETFs. And global ETFs has also went up to about 10 trillion in 2021, and it has dropped slightly towards 9.5 trillion in the total global ETF assets. So what does it mean? It means that a lot more issuers are issuing ETFs, and it has covered more than 9.5 trillion right now. Okay, so ETFs, what does it mean? In short, is ETF, but a long form is exchange traded funds. So it's like a unit trust, but you need not to buy through an agent, but you can buy through the stock in the stock market. So it's open-ended investment funds, listed and traded on stock exchange. It can be a single stock ETF. It can also be a basket of stocks. So normally, what I suggest, retailers or investors is Why do we choose ETFs? That is very important because you need to know your investment objectives. So I'm here to give you an idea of if you don't like to pick stocks, company A, company B, company C, you can actually pick a basket of stocks, and that is why ETFs is here to help. So there is some passive ETFs. There are also active ETFs. What is passive and what is active, later on I will just share with you. But a very clear-cut differentiation is that, recently we have the Katie Wood. Yeah? Katie Wood is the fund manager of ARKK, and those are actively managed ETF. So those are active. So throughout the years, investors are getting more demanding because early on we only have passive ETFs. Why is it so? It's because this is some sort of very easy use tool, user-friendly tool to need not to select stocks, but instead ETF is like a basket. So you can straight away buy those S&P 500 or even NASDAQ tracking ETFs. So it gives you the exposure to the whole of the universe of S&P 500. So S&P 500 covers 500 stocks, but if you want to buy into every single stocks, you need to pay a lot of trading fees, right? If you buy 500 stocks, you need to pay 500 times of brokerage fee. But ETF itself is a basket already, and you can straight away buy into one ETF equivalent to the to have the whole universe of S&P 500. That is a very, very good tool to use to mimic, to perform as what the S&P 500 can perform. So you can buy straight away into the ETF to mimic the 500 stocks that if you want to buy individually, that is the trading fees that you have to pay. But instead, you buy an ETF, straight away lower down your cost. You just need to buy one time into ETF, and the liquidity is always there. Because if the issuer is very promising, normally a lot of people will buy into it, and a lot of this liquidity will be out there to trade. So you need not to worry so much if the issuers are very promising. So later on I will share with you on some of the issuers like this BlackRock Financial Management. So asset under management, it has about 2.23 trillion, and number of ETFs that they have been offering about 300 plus, and we can see what are the famous ETFs that they have actually produced, which is iShares Core S&P 500. It tracks the S&P 500 index and has more than 300 billion in terms of their AUM. Okay, so basically they have gathered an amount of 300 billion to put that money into buying the whole S&P 500 index to track the S&P 500 index. So you just need to buy. It's like simply buying into this ETF will get you exposure into these 500 stocks straight away. Okay. So another one would be iShares Core MSCI EAFE ETF, which tracks developed markets outside of North America, which has 96 billion in AUM. So these are some of the one of the issuers, top issuers. The other one is Vanguard. Okay, Vanguard has 1.9 trillion in AUM. Some of their famous or largest ETFs include the Vanguard Total Stock Market ETF and also Vanguard S&P 500. So you can see that a lot of people are actually tracking S&P 500. And what are the differentiation between some of these providers or issuers out there? It is basically the expense ratio. So who can provide a very good expense ratio will provide them the edge. So for instance, if you are thinking about expense ratio, is basically the cost, okay, the cost that you are paying the fund manager to track the S&P 500 for you. So roughly you might pay 0.17% for that particular year. Okay. So for Vanguard, it is very, very low, 0.05% average AUM weighted ETF expense ratio, which means that their cost is very low, and therefore if you buy into this ETF of whatever this Vanguard is actually providing, your expense ratio is much lower as compared to other issuers. Okay, and if you look into SSGA, this State Street SPDR ETF is issued by this SSGA, and they have the largest ETF, okay, which is tracking the S&P 500 at 374.47 billion in AUM. So which means that in S&P 500, there are so many people tracking it. But why you want to pick this SPDR or SSGA over Vanguard over the rest of the issuers? Then you have to understand how do they manage, how are they managing, okay, this S&P 500 tracking. First of all, you will look at expense ratio, and maybe perhaps you want to look at famous issuer, so that hopefully that liquidity is there, because they need to buy the stocks from the market as well. And so liquidity is a very, very important thing. And yeah, so those are the two very important factors, okay? So yeah, choosing an ETF is very important because you need to know your objective. Some people want to play direction, so they would use the ETFs to trade perhaps QQQ or the bull market or bear market. Like just now in the first table that I've showed you, we have Tesla even, okay, Tesla on the bull or even the bear direction. So your investment objectives must be very clear. You are trading only the stock itself, or basket, or certain thematic. Okay, so let's see what we have later on to justify what sort of investment objective that you want to craft it out for yourself, and so that you can actually find a very good ETF for yourself as well. Okay, fees associated with the ETF, like what I mentioned, expense ratio, and also tracking error. So tracking error means that when you buy into the ETFs, and when the ETFs wants to buy into the underlying stocks, there might be some tracking error. So they need to be it needs to be very, very automated in order for you to, when you buy and sell, they can quickly track the underlying shares and make sure they have gotten it at a very, very competitive price against other people. Okay, so that is the idea here. So if people have bought into let's say Apple, but they are fighting against so many issuers, and so many issuers have to fight into buying into all these 500 companies, any price differential between what they have bought and versus what they are tracking right now, it will become the tracking error. So that is what I want to mention here. The tracking error sometimes can go up to 0.5% a year, or even up to 1%. So you need to also understand the tracking error as to understand who manages the money better than other issuers. Okay. So let's go into the types of ETFs. So there are so many types of ETFs. We have equity, so just solely focus on stocks, or even stocks, or even the index itself. Like just now, what we mentioned is S&P 500, so it tracks the index. Or you can look into HSI, Hong Kong Hang Seng Index, and Hang Seng Index also have their Hong Kong bull or bear direction ETFs. So those are the ETFs that you can think of is under equity side. Okay, fixed income will be related to bonds, treasuries, and recently we have talked about this bond yield related. So those are the fixed income. Commodity ETF is very, very interesting as well, because a lot of people would use something like gold to hedge their portfolio. So they can actually use gold ETF, or they want to speculate on maybe oil prices. We have also commodity ETF, such as the crude oil ETF, to try to make an opportunity to see whether we have any opportunities within the oil-related sectors. So that falls under the commodity ETFs. And the last one will be leverage and inverse ETFs, which is when I say leverage means when you are buying into these leverage ETFs, the moment you buy into these ETFs, you are already expecting either 2 times or 3 times more in terms of your rewards. And also don't forget about the risk as well, because when you buy into certain ETFs that it is a bull 3 times ETF, let's say, but when the index it has fell by 1%, you are multiplying your downside risk as well to 3 times. So yeah, leverage and inverse ETF is for sophisticated traders, and not advisable to hold on overnight. Normally, what they do is for ETFs that is having leverage and also inverse, normally they do it on a daily intraday trading perspective. Okay. Okay, just to bring you to some asset classes here, other than just the equity, fixed income, commodity leverage, and inverse. But we are also having, I mean, in the market there are many other products. So it can based on AUM ranking, the most popular one would be equities, bond, and also commodity. And for real estate, multi-asset, preferred stocks, alternatives, currency, and also volatilities, these are some of the other alternatives under the ETF asset classes. They are not so popular, but sometimes they can also provide you some opportunities. But generally speaking, investors would like to use these three would do: equities, bond, and commodity, because you have the company's perspective, equity, you have bonds to cover some of the treasury side of things, the bonds, bond yield, and things like that, and also maybe commodity like gold related, or you want to speculate on oil. So those fall under that portion. So you are pretty much covered in a way. But some other hedge funds or some other sophisticated investors, they might want to use volatility to hedge their positions and things like that. So they want to have some exposure, hedging of the currency exposure. They can use currency ETF as well. So these are some of the other ways to hedge your some other sophisticated strategies to hedge your portfolio in some manner. Okay, so far so good. I hope you are digesting some of this information well. And if you have any questions, you can just drop into the comment section. Maybe later on I'll take some questions from there. Okay. So equity ETF can also segregate into many different sectors. So you can have technology, healthcare, or whatever it is. These are all the sectors that you can actually find from some of this website. ETF DB is one of the places I go to, and you can see that technology, healthcare, and energy is top 3 in terms of the AUM ranking, and the last is telecommunication is being the last under the AUM. So perhaps when more people wants to find some exposure into technology stocks, healthcare stocks, or even energy stocks, it's easy because they can have many different ETFs to support that part. Perhaps if you want to find telecommunication or consumer staples, consumer discretionary, it might not be so easy to find because it is less option to choose from. So that's why these are some of the general rule of thumb to look at the AUM leader to find out what are the attractive interested sectors to look at for that particular equity classification. Okay, so top 3 would be technology, healthcare, and energy. So under the top 5 equity ETF based on total asset for the equity ETF, we can have some of these SPY, IVV, VOO, VTI, QQQ. So what they are tracking mainly would be S&P 500 and also NASDAQ index. And so these are some of the AUM that has that we can actually look for. So quite huge. Because S&P 500 is a very popular product, so that's why a lot of people are putting money into setting up this ETF in order for people to trade. So their advantage could be their expense ratio or the management of the cost is very low, and therefore they can actually have the advantage over other issuers. Okay, but generally speaking, if you are tracking S&P 500, the performance shouldn't go too far off. Okay, so for instance, like SPDR is 8.11%, Vanguard is 8.14%. So it shouldn't go too far off. Okay. Okay, so just to give you an idea, SPY is from the issuer of State Street. The expense ratio is 0.09%. And inception is since 1993. Just now we have mentioned this is the first ETF that is being introduced to the community, investing community, and it tracks S&P 500. And you can actually track. You can actually go into the ETF DB to actually look out for more information. But I just want to give you an idea is that this SPY tracks the S&P 500, and S&P 500 is this. You can see that whenever you think. Some of the ideas here is that whenever you think the market is actually going higher, you can actually use that as one of the tools to buy in the SPY to gain exposure into S&P 500. So you need not to go into buying every counter inside S&P 500. So that is the whole idea here. So QQQ is issuer is Invesco, okay, Invesco, and they track the Nasdaq 100 index, and therefore, if you look into Nasdaq most likely it will be more towards the technology sector, and that is why if you have the idea of thinking that Nasdaq will go higher, then you perhaps want to put your money into Nasdaq, the QQQ to have some exposure in it. But again, QQQ can be just in the direction of long. But if you are looking in the idea of leveraging your investment journey, you can also look into leverage ETF for the QQQ. And also leverage bull or leverage long or leverage short as well. So it depends on, first of all, you have to find out what issuer you want to go for. Perhaps to choose the issuer, you look for what is expense ratio. And secondly, you look for direction, whether you want a bull or you want a bear, or you can call it the long and the short. In terms of that. And also, if you're looking into the idea of whether is there any leverage into it, you look for 3x, 2x, or whatever it is, that will give you the exposure in terms of the leverage exposure, okay? So other than that, we have fixed income ETFs. So they will cover most likely the bond, US government debt, especially right now is very hit because the yields has actually gone up so much recently, and so you can use the fixed income ETF to have some exposure within the bond market as well. So not a lot of people can actually expose themselves into the bonds market, because sometimes if you want to buy into bonds, you need a very heavy capital layout. But ETF is something like a very small layout, but you can actually have some exposure within the bonds market. So some of the exposure categories you can look for, perhaps is the sovereign, which is government debt, government nations debt. Corporate can be also, they have some exposure within the corporate debt. Okay, so so these are some of the categories under the fixed income ETF. So these are some of the names: BND, AGG, BNDX, VCIT, BSV. So these are some of the ETF names. So if you want to know more, you can actually click into some of these in the ETF DB. ETF DB will be my go-to webpage to find out more about all these ETFs. And you can see the expense ratio is very, very low for fixed income. So perhaps this could be one of your way to expose yourself for the fixed income segment. Okay. So you can also look for what sort of bond market they are into, where is the region they are into. Like for instance, this is US. US-based, US region bond, and the bond duration can be all term, so which means they cover 2-year, 5-year, 10-year, or even 30-year. So yeah, very, very broad and very, it covers everything on the bond market. AGG also same thing. We have an expense ratio of 0.03% and also total bond market and all terms as well. So basically they cover all the US bonds. Okay. So coming to this commodity ETF, I think it's very, very relatable to us because recently we also understand that gold prices has surged towards all-time high area, not breaking the earlier all-time high yet, but it's very nearby there. Commodity ETF can also be one of the very interesting ways to actually hedge your portfolio. Why do I say so? Is because sometimes when market is very uncertain, like the recent times, and that is where the gold prices has surged through the roof, and that's why we can actually look for some of this opportunity within the commodity ETF. So one of it will be definitely the gold, GLD, that they track the London Bullion Market Association gold price, and this is having a 0.4% expense ratio. So you can see that expense ratio is slightly higher. Perhaps they are having more in terms of their costing, fund management costs, and therefore you need to monitor this in order for you to decide whether you want to buy into this ETF. And again, if the gold prices that you think that can go higher, perhaps you can get some exposure using this gold ETF. Also very relatable to us, we have the crude oil price. We understand that in Malaysia it is very easy to track this crude oil prices. Why is it so? It's because our country is always being viewed as this commodity nation. We always track the oil prices in order to understand whether our oil and gas companies are working well or not. And given that this kind of knowledge, we can actually use it for the ETF as well. So USO is actually tracking the front month light sweet crude oil, and it is the crude oil related ETF, and this is based on the future base. And right now here, laddered, which means that they covered a lot of future contracts. So they are not only covering maybe 3 months, 6 months, they covered everything. So it means laddered, okay? And if you have an idea of, you think that the WTI crude oil can go higher, then perhaps you can use this ETF to expose yourself to crude oil related exposure. So that is how you use ETF, okay? ETF as a way to expose yourself to that certain niche of your portfolio. So it is sometimes very tactical, because you can think that during the spike of the crude oil during Ukraine-Russia tension, when when this war erupted, perhaps you can use this as one of the options to look for opportunities within the crude oil segment. Okay. Let's not talk. Let's talk about this leverage and inverse ETF, but not in depth, because I don't want to cover too in depth, because it is very technical. But just to give you an idea, today, this morning, we have the Hang Seng Index, falling by near to 1.7%, and during this kind of market, you might want to ask me, hey Louis, during market, when market is bad, what should I do with my investment opportunity? How should I look for investment opportunity during this kind of bad market? So this morning, to say that not this morning, but around 6 p.m. just now, we have come out with this posting on how can you invest in a downward market. So we have 3 Hong Kong listed leverage inverse ETF to watch. This is the title of the post. And if you look into this 3 instrument here, it has actually went up. Okay, so basically we have this instrument in Hong Kong as well. It's leverage inverse, so which means that you are speculating that the market is going to fall, and therefore you are buying into this leverage inverse ETF in order to take an advantage on these falling markets. So basically, this 07552 will be telling you that right now, this is a tool for you to speculate that it's going down, and if the Hang Seng Index is going down, then you should be able to make some money. So this is some of the opportunities out there, and it has went up more than at least 1%, 1.7%. Okay, so this is, I think, some of the leverage tool. Okay, leverage inverse ETF that you can actually look out for. Okay, but make sure you have to take note that leverage and inverse ETFs are actually very sophisticated, and you try not to hold overnight. Okay, try not to hold overnight, because it can double down in terms of your damage, okay, because it is leverage, and also if you're not getting the right direction, try not to do it. Just try to use as conservative as possible. Try to use just one time first to understand the whole mechanism behind it. Okay, so throughout the years, we have also thematic ETF as well. So recently, we have AI ETFs, blockchain ETFs, marijuana ETFs as well, but we are not promoting them. But we are just trying to say that there are a lot more opportunities out there in the US, and we can actually look out for all these investment tools, okay? Investment tools for getting into the right trend, okay? Thematic ETF could be ChatGPT and AI related, or even blockchain related. So those are the things that you can actually look out for in ETFs. So these are some of the AI theme ETFs as well, IYW, FTEC, FDN, IXN, XT. So these are some of the information that we can gather from ETFDB. So you can actually look out in more information from ETFDB. Okay. Again, just to recap about what is so good about ETFs, right? I've tell you that it is diversified exposure. So which means that by buying one ETF, let's say S&P, SPY, we are already exposing ourselves into the opportunities within S&P 500. So you need not to buy all of them, but instead just buy one ETF will be enough. Cost effectiveness is lower because you can view it as if you're buying unit trust versus buying ETF, ETF is much lower as compared to the fees of you're paying for unit trusts. Okay, you can buy and sell throughout the day. Throughout the day, you need not to wait until end of the day to have the NAV before you buy it. So it is almost instantaneously you are buying into it, and it's very transparent in knowing what you're buying. So that is the beauty about ETFs. Okay. So trading about ETF is there are two things. One is just to look at the price, bid and ask price. As long as they are very close nearby, the bid and ask spread is not too wide. I think that is quite good to buy and sell. You don't want to buy those very wide spread kind of ETFs. Liquidity is also very important. So basically, that would tell you that when you buy into it, you can sell easily. So let's look into this ETF trading like normal. We have this QQQ versus NASDAQ. So QQQ is the black color or blue color line or gray color line, then the NASDAQ is the orange color line. So it tracks almost very similar to the underlying basket of stocks. So QQQ will track NASDAQ very closely. So you can see that it is very close to nearby, and until recently could be some tracking error that provides this very minor kind of difference. This could be caused by the tracking error. Okay. So trading value is very important as well. So that is the second point that I want to mention, the liquidity part. So under ETF.com, you can actually look at this screener. You can actually screen through what are the ETF that is trading more than 2 billion average daily trading value. So these are some of the names. You can actually look out for those that has high liquidity. But these are also individual preference, just that I want to show you that if you want to go in and get out easily, make sure that there is liquidity in the ETF that you are buying into. Some of the ETF fees, which is so-called not seen or not mentioned too much, will be the bid-ask spread, because bid-ask spread will be determining by the market forces, right? Market forces and also the market makers, and also brokerage commissions. You can actually look up wherever, which is when you trade, you need to pay some brokerage as well. So those are the things that you need to account for. And also expense ratio, just how I mentioned about this, is the operating expenses of an ETF. So issuer, when they have people, when they have headcounts, they have operating expenses. So they have investment advisory fee as well, admin costs as well. So those are the things that they take into account. And so expense ratio is just the amount versus or against the total fund asset. So that will give you the expense ratio calculation. So the lower it is, the lower cost it is, the better it will be. Okay, so that is the whole general idea here. Okay, just now we have mentioned about active and also passive ETFs. So passive is just to track, because you don't want to select the stocks yourself. You don't want to select company A or company B will rally, or you don't want to select this company A or company B will tank or fall, because when you buy into company A, maybe company A doesn't run, but company B runs. Okay, so the idea of passive ETFs existed is because when you if you have an opportunity to track the whole basket itself, then straight away you can actually get exposure to all this. Then when the whole basket runs together, then you are already you need not to worry about the stock picking part, because stock picking part can be quite random and can be quite it is a luck factor. Okay. So active ETFs will be referring to those that they implement, they implement their own strategies, they have their own discretion of the portfolio manager, such as, KT Wood is one of the famous active ETFs, and also SGIM. Okay, this is very interesting because Jim Cramer's, when he mentions some stocks, normally the stocks will tank. So there is some talks or market talks about it, whereby when he mentions some stocks, we better don't get involved in that stocks. So this is SGIM. SGIM means short whatever that he is mentioning in the Twitter or during the broadcast of the news. When he mentions something, that is why the ETFs has came out. This is one of the another active ETFs that is referring to Jim Cramer's recommendation in order to short whatever that he is mentioning. So this is the kind of idea behind it. But Katie Wood is being named as the female Warren Buffett early on. Also mentioned that she wants to invest in all this new economy and new green energy things. So that's why Tesla is one of the top picks by Katie Wood as well. And this is one of the active ETF that you can look out for in the market. So because of investors getting more and more sophisticated and more demanding, so that is why they need to come up with all these new ETFs to cater for these new investors. Okay, so that's why passive is more like a very user-friendly tool, and I think all these active ETFs, you have to believe in the person. You have to believe in Katie Wood, or you have to believe in Jim Cramer's maybe, in order for you to invest in this kind of ETFs. Okay. So I just want to mention about some of the strategies that people use. How did they use ETF for? Is to have maybe core satellite kind of strategy, or maybe they have tactical asset allocation, or maybe they don't have any view on market. They would do dollar cost averaging. So let me explain in more layman terms. Is like if you have an idea of like for instance Warren Buffett. Warren Buffett likes Apple. He puts Apple as a core portfolio. Core exposure in his portfolio. About 40% it is on Apple itself. Why doesn't he wants to use equal weightage on this his portfolio? He might have more views or more biasness towards that Apple, and therefore he puts more weightage on Apple. So it's the same thing. Core satellite is that you have a core in maybe S&P 500 index fund. So you have the best 500 companies in the world, first of all. Then you get some defensiveness in utilities fund, get 20% in their exposure, and get something in commodities, and get something in also bonds. So that gives you the core S&P 500 stocks, but also you have something beside it to give you some defensiveness of the portfolio and some alpha maybe from commodities such as gold, or even from the crude oil, and get some defensive return or cash return or cash market return from the bond market as well. So that is something that you can actually look into as well to construct your portfolio. That is one of the way. But if you have view in the market, such as this kind of view, say that earlier on I have a view that we are into a very strong bull market. Therefore, you put more into stocks and more into stocks, but 45% in bonds and 10% in cash. But later stage, when you think that you have the view that market might be going to recession, might be going to some uncertainty period, and when the yield curve has inverted, potential leading to an indicator of a recession, then you can reduce the stocks portfolio to maybe 20%, then you stay on cash 10% or even 70% on bonds. Okay, so these are kind of a tactical asset allocation, because you have a view to say that the current position is towards bull market, then therefore you put into stocks or whatever it is. Then when you think that the market might go into recession or might go into uncertain period, then you can switch your stocks, your ETF into more towards the bond side of things. So get more defensive in your portfolio. So those are the strategies that you can actually implement, deploy during this kind of market uncertainty period. Okay. Another scenario that you can use if any investors are trying to automate as much as possible, you can also use dollar cost averaging. What it means is that by investing a similar amount throughout frequency of maybe monthly basis, quarterly basis, up to you. As long as you have the money to put in, you try to put in on a very timely basis. So if I put in money for S&P 500 SPY for a period of say 10 years, and per month I put in $100 US, and it is on a monthly basis. Okay, let's say this is a strategy that you want to implement. So based on this kind of strategy, you are most likely to be able to gain generated about 7,000 over the past 10 years. Okay, so this is one of the ways that you can actually use. Why do we pick SPY to build this DCA? Is because S&P 500 is the world's best and largest 500 companies in the world. So if you are putting all your eggs into these 500 companies, and that would give you an understanding of, you are already putting it in a good basket of stocks, so you just need to DCA every month in order to get that kind of returns. Okay, but again, historical records is doesn't justify the future rewards. But I want to say that every now and then there will be ups and downs in the market. So as long as you are doing the DCA correctly, you should be able to enjoy the opportunity within these 500 best companies. Okay, so that is the whole idea here. So based on the DCA model, you are most likely to be always, over the past 10 years, you are almost likely to be always at below the cost of S&P 500. Okay, so as long as you put in $100 per month, your average cost will not surge. Based on the historical price chart here, currently SPY is near towards 400, and your cost will be much lower, near towards the 250 or 260 range. Okay. So some other risks that you have to monitor as well is just now I've mentioned, the tracking error, which is some issuers are very, very automated in the way that it is very, very less likely that they will go into this tracking error issue. And the lower the tracking error, the better it is. It will not cost you the performance. Okay, so that is the whole idea here on tracking error. So make sure that you also find some information on tracking error before you invest into those ETF. And next we have concentration. So if you have this concentration risk, so for instance, ETF can be also regional ETF, so like Brazil or wherever, Turkey. So those are the things that you have to find out. Due to the concentration, you don't want to get too exposed to that. So these are some of the risks of the ETF. And liquidity, sometimes the ETF can be very low liquidity. Some ETFs can be very, very good in liquidity. So I think the best is to look out for very good liquidity. Very, very, very good liquidity means highly tradable ETFs in the stock markets. Okay. So it has come to almost the end of my session. So if you have any more questions or any more information that you want to look for, actually there are two websites that you can actually look out. Is ETF.com and also ETFDB.com. But the list can go up more. You can actually Google for more information for ETFs. But today, just to summarize the whole intention of this ETF is that we can always use, like for instance, this thematic of the recent opportunity is the earnings season, whereby Microsoft, Amazon, Meta, Google, all these are coming out results. If they can beat the stock market, beat the consensus, I think that is a good sign whereby technology stocks or technology ETF can be one of the tradable ETFs going forward. And if you are looking at the GDP numbers or even at the PC numbers, those are the areas that you may want to find out whether they would push the Federal Reserve on whichever way, which means that if GDP is on a potential contraction mode, perhaps Federal Reserve might go into some less hawkish tone, and that is the direction on these few events that you can use these events to your advantage. Okay, so if you want to put in money into equity ETF, perhaps right now you could look at technology ETF, because these few events, the earnings season coupled with the Federal Reserve FOMC meeting, will be a very good catalyst for you to trade the technology ETF. So QQQ, SPY could be some of the names that you can actually look out for. If you think that they are going to be more hawkish for Federal Reserve, then you can actually short QQQ, which means that you can use one of the instrument to short, and depending on what leverage you want, some short QQQ or short Nasdaq index tracking ETF can be also leverage of 2 times or leverage of 3 times. So these are some of the events that I think in the near term we can have some opportunities within the ETF markets. Okay, so I think that is all I have for today, and stay tuned. We will be right back for a Q&A session and some mini games with prizes to be won.
How to buy Hong Kong and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You are now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
How to buy Hong Kong and US stocks with M Plus Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M Plus Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M Plus Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M Plus Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M Plus Global, winning the world.
Hi everyone, and we're back. Now, just want to say thank you to Louis for joining us and sharing your knowledge with all of us.
No problem.
Now, we're going to head into our little Q&A. So I'm just going to ask him some questions that I have based on his whole talk. Now, that took a while, right?
Yeah, I guess the whole section is a bit too dry and also too much information to digest. But I think, you can ask me anything.
Okay. So I know you were talking a bit about AI. And so ChatGPT has been a rising trend, right?
Yep.
So if I were to ride on this trend, is there any ETF that I can choose that is related to AI?
Yeah, I think just now I've shared one slide about this. And normally what we can actually look into the AI theme is actually more related to technology stocks.
Okay.
So perhaps those that has technology related names, then you can track inside the ETFs to understand the constituents.
Okay.
Then most likely those are the stocks that you can actually, those are the ETFs that you can actually look for. Because when we talk about AI and also ChatGPT or whatever it is, definitely we can't go away from the connectivity or the internet security,
Yeah, definitely.
cybersecurity, and also we can go into cloud-related stocks, and also semicon, and also the chips-related industries such as NVIDIA,
Okay.
AMD, Intel. All these are actually related to AI. So it's a very broad spectrum of stocks that you can pick up from.
Right.
But as long as those stocks are under these ETFs, generally speaking, we can call this technology or AI related theme kind of ETFs.
Okay. So, might be a stupid question. Apple is a phone considered technology? Yes? No?
Okay, so Apple is like consumer electronics. So you are
Okay.
looking at when you buy iPhone, when you buy MacBook, all these are related to consumer electronics. So yeah, so he doesn't. I mean, Apple doesn't produce those hardware inside like drive.
Right. So it's more like software engineering type things.
It's more towards consumer electronics that it's like a gadget, okay? But again, I think Apple is trying to transform a little bit to more towards they can have their own chips.
Right.
Like M1, M2 is owned by them. So I think they want to be more efficient in a way going forward. So last time they always used TSMC and also Samsung to build their chips. But right now they are moving into that direction to build their own chips, and somehow it is faster and more efficient than the rest of the players out there. So I think on this note, right, Apple can be a consumer electronic, but at the same time they are transforming themselves into a different animal. So which means that it can be also considered as technology going forward. But more of this revenue is generated from also these services such as Apple iTunes,
their cloud and their
App stores.
Apple ecosystem.
Yes. So it's like Apple ecosystem will contribute to whole revenue towards that. It's not really just a technology company, but they are moving to that direction. Yeah.
I see. Okay. Do you think in the near future, maybe like one day they would want to do ETFs? How do they even go into that sort of thing?
ETFs?
Yeah.
No. ETFs.
So it's completely different.
Yeah, completely different. Yeah.
My bad. Okay.
Yeah.
Never mind. Next question. Do you have specific sectoral ETFs to target on a specific sector?
Okay. So if we are talking about the sectoral wise, like last year itself, when oil prices has surged through the roof.
Yes.
And I think the oil energy related sector are the ones that is actually making good performance.
Yes.
Almost like most of the ETFs can gain more than 50% throughout that particular year. So if you're looking into this sectoral wise, I think oil and gas is very relatable to Malaysian to buy into it, because when we talk about oil related is like in our blood.
Yeah.
It's in our blood, like
all the palm oil and stuff. Yeah.
Crude oil. So basically, if we understand this oil related sector, I think is one of the sector that I think it is more related to us is definitely the oil, and also oil related ETFs is the one that I think we can push out to the clients.
Okay.
Because when there is any spike in terms of up and downs in terms of the oil price, I think it's good for us to get some exposure into the oil ETFs.
Right.
Yeah.
Okay. Now talking about ETFs and single stocks, right? Everything is obviously risky in its own way, but what is? Wait, I forgot.
It's all right.
How would you? Where did I put it? Sorry. Why should I trade it rather than single stocks?
Okay. Yeah, just now I've mentioned about this diversification effect, because if you're buying into, as a human being, we like to always, stock pick. We like to maybe choose Apple over Microsoft over certain things. But what if one day when you pick Apple, but the Apple doesn't move higher, but Microsoft move higher. So you might miss out that opportunity, although they are in the same technology sector, but you miss out in that sense. So ETFs will give you the advantage of if you're bullish or bearish on certain sectors, then you can buy straight away the whole sectors instead of just stock picking. So that will give you, that will diversify your risk, and so you can get exposure into the whole basket of stocks and not missing anything out. Yeah.
Okay,
So that is the whole idea here. The intention of the single stock and versus the ETF is definitely because we don't want to do stock picking, and therefore you use a basket of stocks to replicate your investment journey.
Right. Okay. But usually with ETFs, do people don't hold it very long, right?
It depends. Okay, it depends. So just now I mentioned a few, right?
Yeah.
Like equity ETF, fixed income, the commodity, and also leverage and inverse ETF. So normally, what do I think about the ETF is, if you want to hold long term in terms of ETFs, what is your investment criteria? First of all, I would choose, if I want to hold on very long term, maybe I would want to track the S&P 500, because S&P 500 is the world's largest, companies, 500 companies in the world. So that is why I want to get exposure to that.
Okay.
And these companies are legit companies that can make money, and therefore I would hold long term.
So they're more like trustworthy.
Yes.
Okay.
Okay. On the other hand, if we are looking at leverage and inverse ETF,
Yes.
these are very, very sophisticated. So make sure you know what is inside the whole specification. You must understand what is 2 times, what is 3 times, what is the direction.
Right.
Then only you trade, because these are trading kind of ETFs. Therefore, it is a short-term holding period, as short as a few minutes, and you have to trade it.
Few minutes only.
Because when things happen, it can be a spike. Then you can sell off the ETFs, and when things happens like a war or whatever it is, a very surprise action or surprise move, then it will affect the volatility of the particular ETF. Then you can actually trade and wait for the spike up, then you just sell off. But try not to hold more than 1 or 2 days, because your damage will be multiplied.
Right.
For instance, if you are wrong one day on one direction, but you are using 3x leverage. So which means that if the market goes up 1%, but you are shorting the market by 1%, which means that on that particular day you are already down by 3% because you are wrong on that.
Yeah.
Okay. And again, if the market goes up by another 1%, it multiplied by another 3 times.
So does that mean you're lower, like you're 6%, like
more than 6%, because it compound.
Oh.
It compound that particular. When you're at 3%, then if it goes up by 1%, so you have to compound it by another 3%. So it is, generally speaking, it is 3 plus 3. Negative 3 minus negative 3 means negative 6.
Yeah.
But the outcome might be more than negative 6. Yeah. So the multiplier effect, you have to understand the whole very sophisticated of inverse ETF. And also the 3x, 2x is definitely for sophisticated investors. So better not touch if you don't know. Yeah.
For seasoned traders, not for me. Okay, but would you say so? These short-term leverage ETFs, right? Do you think they're more like crypto?
Wow, there's a very. If you talk about the leverage, maybe yes, but they are totally different animal. Okay.
Yeah, they're totally different, but sort of. Would you say it's sort of similar in that way?
Maybe the volatility, yes, it can be that, but I think crypto has higher volatility. Maybe one day can go up,
like very high, just shoots 2x,
3x, multi-bagger. It can be that kind of movements. But I think for ETFs itself, maybe it's more measured the way. The volatility is more measured, so it's more moderate, and therefore the fluctuations may not go up to as high as cryptos.
Okay.
So that's why I don't put them together. It's not really equal in that sense.
I see. Okay.
Yeah.
So then it's not really like, you can't really compare it in that sense.
Yeah.
Understand. Okay. Another
Maybe
question.
we can take some questions from.
Okay. Yeah. Let's take a question from the chat. Are there any ETFs invest in Australia market and Bitcoin?
Maybe we can actually use this app here, M Plus Global app.
Okay.
We certainly can put in, because our search function is so good that we can actually put in anything that you can think of, then it will search from all quotes, news, and also health.
Oh, okay.
So when you put in Australia, then perhaps you can actually look out for some of these ETFs. So if I can understand here, EWA could be one of the ETFs that you can look for the Australian Index Fund. So which means that iShares is just under BlackRock. BlackRock issuer issues this EWA ETF, and it covers Australia Index. Australia region kind of ETF. So when you press in, then you can actually go into profile. What do they cover? Financials, basic materials, healthcare, energy consumer. So these are the weightage of every of the sectors. So financials, they have about 36%. Basic materials about 26%. I guess Australia is like full of these mining activities there. So gold is related. So healthcare is there, energy is there, consumer is there. So this will be some rough idea of what is inside the ETFs. Okay. So on the top 10 constituents, BHP Group, Commonwealth, CSL, National Australia. Okay, so those are the companies that are in, constituents that are in. Yep.
So let's check the ETFs.
Yeah, wait now. Overview. Okay, so let's see overview. MSCI Australia Index. So it covers MSCI Australia Index, and it is BlackRock is the issuer. So iShares. So yep. So this is the idea. If you want to understand to find out which region or which kind of instrument that you want to trade, just press this search function. Then whatever it is, you just put it in, and you can actually find out whether we have that options to trade or not.
Okay. See, so if you haven't already downloaded the M Plus Global app with all its amazing features, like the search feature, like the market feature, your news feature even, go ahead and scan the QR code right here and download and register your account. And again, if you deposit 10,000 ringgit into your trading account, you will be able to receive, let me get this right, 5 free grab shares with the 30 days of Hong Kong and US live quotes. And also, you will be able to get the 90 days worth of NASDAQ real-time market data. So, yep, that is all. We will continue with our little mini game right now. Okay, so here we have our first question. But before we get into that, I just want to remind everyone what you will win if you participate and you answer all the questions correctly. So you'll be able to stand a chance to win 20 ringgit trading voucher that will be credited into your trading account. So at the end of this live, we'll put in a Google form into the chat, and you just need to fill in your details. Okay, so back to the question. So name an ETF that tracks the NASDAQ index. How do you tell? Like for a newbie, how do you know?
Like just now in my slides, I think we are putting a lot of clues, right?
Just so many things going on. Okay, so if you check the app also, you can find out, right?
So yeah, of course. Let's see whether I can find it with NASDAQ. Not really. Maybe we can check. Yeah, a lot of people answered QQQ. So let's put in QQQ.
QQQ.
Yep.
QQQ was the NASDAQ.
The question is on NASDAQ. Okay. Are you hungry?
Quite.
Too hungry. Too hungry, you think?
Your brain not functioning.
Okay.
Okay. So is that the answer?
Yes.
Yeah. Okay. Sorry. Second question. Let's go to the second question. Yeah. What are the benefits of investing in ETFs? Okay,
Wow,
here
that's
Liming
fast.
says diversified, cost effectiveness, simplicity, and liquidity. I think that sounds correct. Like,
that is very, very fast.
Yeah, the comments just come in like, whew. Right.
They are listening.
Everybody's paying attention.
Yeah, very good. So I think benefits of investing in ETF, just like I mentioned, if you are buying into unit trust, you need to pay like agent fees and things like that. So the cost will be higher, definitely higher than ETFs. So the good part about it is ETFs will track, and it is very diversified, first of all, and also it has, it can track, and also it has a lower fees entry for buying into all these companies. Just as I mentioned, if you want to buy in all the 500 companies just to put into an index is very, very difficult, and also you have a lot of tracking error, because when you buy one, you have to buy 500 of them, and might as well you buy ETF. ETF will help you to manage all the things, and ETF can be diversified and also lower cost, and also the tracking error can be lower than what you are trying to do it.
Okay, I see. A basket of stocks.
Yes, a lot of people answered it correctly.
Okay, so the next question. Name 2 types of ETFs available in the US market.
Okay, just now I think for this there are, a few answers to it.
Okay.
I saw the question answer is active and passive, but I think if we look into the asset classes, we have a lot of asset classes. Just now I mentioned a bit more than I think 2 or 3. We have the equity ETFs,
right?
And also we have the commodity ETFs,
yes,
and also leverage one is the next one. But again, if we are talking about the general rule of thumb is that every asset classes will be the asset classes or the types of ETFs available in US market. So I think for this, I think we can take active and passive ETF. It can be also correct. Shara compliant, HLAL and SPUS. Let me check what is. Oh, that's new.
So wait, so when you're talking about the type of ETF, is it like what you said, the equity and all?
Yeah,
like the constituents? Okay,
yeah. So maybe the question is not too detailed. But again, I think I can accept. I think I can accept the active and also passive ETF, because that is also 2 types of it. But again, when we talk about the asset classes, it can be also the types of ETFs that I've mentioned in the slides itself. So for just on the asset classes, we have equity, we have commodity, we have fixed income. So those are the things that I've mentioned in the slides.
Okay. And that is all the questions for today, and I'm afraid. But if you stay tuned to all the rest of our live shows, so we stream every morning from 9 to 11 a.m. and every evening from 7 p.m. to 9 p.m. Sorry. Really, no food in my brain not working. Okay.
No, brain juice.
Yeah, no brain juice. Okay. So I still have a few questions.
Can no issues.
Okay, so can you tell me what are some of the best performing ETFs in 2022?
Yeah, okay. So if we understand that last year, financial year, if we have noticed about the the spike in oil prices after the Ukraine and Russia war.
Yes.
Yeah. So basically, that is one of the sectors that has been performing quite well because of the oil prices spike towards 140 or even 130 US dollar during the time. Right now, it's near to 70, 80. So
it dropped.
Yeah, so it dropped back. But throughout last year, that is a sector that has been very performing. A lot of ETFs has been performing more than maybe 50, 60% throughout that particular year. So I think if I can pinpoint, that is the one sector that is performing well throughout 2022. But this year, it is a bit tough, tough to say. We can't forecast things. But as of this juncture, we think the technology stocks has been falling quite significantly, and there is opportunity, because when price drops to a certain point, and when we think that there is an opportunity, it means that it may recover back from this point. So it has been down, say maybe 20-30%.
Oh my God, okay.
Then right now it could be a bottoming up phase to go up. Yeah.
I see.
Yeah.
We have a question here. Hi Louis, what are some important elements I should look at if I want to invest in ETF that pays dividends versus growth ETFs? Sounds like a good question, but I don't know what it means.
So basically, if you want to look for dividend-paying ETFs,
Okay, so like those companies that pay dividend.
yeah. So I think there are always a niche for this this kind of dividend-paying ETFs because a lot of people wants to have a worry-free kind of investment and also can get passive income.
Okay.
So dividends is like when the company is already a cash cow and it has a very stable business.
Right.
That doesn't need a lot of expansion, capex, capacity expansion. They do not need to put in more money into the business to generate more income. So it's like, for instance, F&N or Nestle. Okay. So perhaps you can think of them. They need not to expand too much, but they can get a lot of cash returns, and they can pay back to the investors. So those are dividends. So if I'm the issuer, what I can think of is that I will put all of these good cash business or good companies that has been paying good dividends, just pack them together and put under one ETF. Then this ETF is very stable in terms of share price because the underlying shares doesn't move up or down. At the same time, these companies can generate money and then pay back to the ETF holders. Okay. So it's very technical.
Layman's term.
So ETF, just now I mentioned, is the issuer buying all these high dividend paying companies.
Okay. So they buy all these companies
to form a basket, and these companies are paying dividends, and therefore ETF holders will also get the dividends. Okay. So if you look into that question there. So if he wants to invest in ETF that paid dividend versus growth ETF, so what are the important elements to look at? So if you are looking at the criteria, for this ETF, perhaps first thing first, whether the constituents, the ETF members, are they paying dividends first of all?
Okay.
Yeah. So if you're buying into technology stocks, maybe they need a lot of money to invest in their future expansion plan. Therefore, they are not paying dividends.
Right.
So the first criteria is that under the constituents, you must look for companies that really generating dividends so that you buy into ETFs to get the dividends. So for growth companies or growth ETFs, normally they are related to tech, technology stocks because those are the areas of multiple growth because like recently we have this AI ChatGPT or whatever it is. So there is a growth story for it, and there is a lot of investment being put under this team, and therefore they need a lot of money to reinvest, and it is very unlikely for them to give back the money to shareholders. So therefore, if you are looking to growth and also the dividend, the first thing first, the constituents under the ETF, are they paying dividend? If yes, then perhaps that is one of the criteria. And how much dividend are they paying? Is it 6% or 8% or more than that? Then that is also part of the criteria that you have to look for. So important requirement that I will look for is that companies, if they are paying more than 6%, I will consider that as a good dividend yield. And if ETF is able to generate more than 6% yield, then I would certainly go for it. Yeah.
Okay.
Yeah.
Well, Hui, I hope that answers your question. We have another question. You mentioned tech ETFs. What do you recommend I look at? Oh, okay.
Yeah, in this scenario, you can actually put it into two different ways to look at it. One is to buy the NASDAQ 100, the QQQ, or you can also look for thematic technology ETF.
Okay.
So just now we have mentioned, right, the AI theme kind of ETF. So perhaps you can look for that kind of thematic to ride along with the so-called the sectorial trend going forward, because you know that AI is related to technology. So AI and technology can be linked together. So you can actually expose yourself to that particular ETFs.
Okay.
Yeah.
I feel like my head is exploding with information overload tonight.
Yeah.
Yeah.
I hope that you can, you can digest it well. Hopefully, it can help you in your investment. Maybe tomorrow you can buy. I mean, later on, 9:30 the market will start, right? Yeah.
Now it's pre-market. Okay.
Yeah.
Okay, so one last question to summarize. What is your final advice for those going into ETFs?
Final advice. I think, first of all, we need to understand the issuers. What are the issuers that we are comfortable with? Because every issuer has their own advantage, their own specific niche of ETFs that they provide for the investors. So, for instance, some can be very good in tracking S&P 500. Some can be good in tracking gold. Some can be very good in tracking oil prices.
Right.
So first of all, you have to understand that. Secondly is just general rule of thumb, expense ratio. Expense ratio is just the fund cost. So total fund cost that you need to put in, like for instance, admin costs, the bookkeeping costs, the headcount costs, or whatever technology that you're putting into keeping the funds running, divided by the total AUM, which is the total asset cost, total asset, then that is the expense ratio. So the lower it is, the better it is for expense ratio. Expense is like you spend money. So if you spend more, it's bad, but if you spend less, it's good. So it's good for the investors if the ratio is smaller.
Oh, I thought if you spend more, it'll be good for them. No, man?
No, spend more. When you buy it, this is part of your cost. So you are giving the issuers the money to maintain the funds. So
spend less.
Yeah, spend less. So it means they have less headcounts is better.
Okay.
Yeah. So less operating cost is better.
I think you should write a book. How to trade 101 for dummies.
Could be, yeah.
Okay, so that is all for our Q&A. We'll get right into announcing the winners of the mini game right now. So our first winner is Lai Ming. Woo, congratulations. You now have 20 ringgit of trading vouchers that will be credited into your account. So again, make sure to scan the QR code and download the app and register an account so that your details, because we need your details, right? So your details can be transferred into the Google form for us. Thank you very much. Second winner, Jason Uy. Congratulations. You also will be credited 20 ringgit trading voucher into your account. And our third winner, Metalinks from the YouTube channel.
Congratulations to everyone.
Yeah, congratulations to all of you. You all have 20 ringgit of 20 ringgit worth of trading vouchers. Yes, that will be credited into your account. So please check out the Google form link right here in the chat and fill in all your details. So if I'm not mistaken, I think it's your contact details, your UID from the app, and your IC as well. Yes, because we need to verify who you are and your existence. Okay. I also just wanted to remind everybody again of the campaigns that we have going on right now. So make sure to download the M Plus Global app and deposit a minimum of 10,000 ringgit to be able to have access to our 90 days free NASDAQ level 1 real-time data. And also you will also be able to get the free 5 Grab shares and the 30 days of Hong Kong and US real-time quotes. So definitely make sure to make the most out of this opportunity while the campaign is still running. But hurry up because you guys only have 5 days left. Yep, that's right. The campaign ends end of April, which is in a few days. Oh my God, can you believe May is coming soon?
Yes.
Yeah.
Yes. Oh yeah, this is my market outlook on Thursday. Yeah, Thursday 7 to 9, 27 April. So stay tuned for more of this, stock picking and perhaps some ETFs in the US. We'll talk about 3 markets. We'll try to cover as many things as possible during this market outlook. It's first time that is under this M Plus Global background, and also we have talked about Bursa Malaysia stocks throughout the past 2.5 years. Right now we are entering Hong Kong US market, so that's why we need to promote also some of the Hong Kong US stocks as well.
Yep, so if you want to see more of Louis, make sure to watch and tune in to the Market Outlook on the 27th of April, which is in a couple of days, at 7 p.m. to 9 p.m. Okay, so just want to say thank you to everyone who has joined us tonight and who was listening. and participated in everything. I hope this has been a really productive session for all of you. I know I've learned quite a few things, although it was really information overload for me today.
Yes.
So for anyone who missed out today, don't worry. We have other sessions for you to join in. Like I said before, every weekday in the morning from 9 a.m. to 11 a.m. and every evening from 7 p.m. to 9 p.m. Okay, so I'm Caitlin and
I'm
this
Louis.
is Louis, our TikTok star. And thank you everyone for joining us tonight. It has been a real pleasure hosting all of you at our M Plus Global Live.
Thank
Good
you,
night.
everyone. Good night.